Good afternoon. I'm Wolfie On Wall Street, and this is Mortgage Minute. Thank you so much for tuning in. We are very excited to give you the Mortgage Insider News. I'm a 40-year veteran, working in correspondent and wholesale mortgage lending for almost 40 years, also trading bonds, and I'm here to answer all of your questions. Please feel free to comment, subscribe, and like. We adore having the opportunity to talk to you, so please comment, and we will try to put your questions into our next segment. Mortgage rates started at near recent highs. They began the week right in line with their highest levels in the past 30 days. This sounds a bit more dramatic than it is because the past 2.5 weeks have been very narrow, where today's rates are merely at the upper edge of that range, i.e. not much more different than the recent lows. As there is no meaningful economic reports driving vitality in the underlying bond market, bonds, as we know, dictate rates, and overseas developments calls for other bond market weaknesses overnight. Weaker bonds, high rates always equal. More extreme rate movement remains on hold until the government shutdown ends, thus allowing implications of the big ticket economy reports that have the biggest impacts on rates. On paper, it was supposed to have been a sleepy session for bonds, with nothing to hurt or to go on the econ calendar. But in practice, we are seeing one of the low instances of overnight selling in months. Ironically, the extreme actions of domestic goods and has reached the skids for more vitality. If unexpected motivations are up, that's arguably the case overnight, as per principal developments in Japan, and the EU pushed yields higher in bond sessions. Japan's government bond market, long shielded by the Bank of Japan's yields, curbed the control that the decades and echoes deflation. It shows faces of deflation that it is a test of faith under this Sani Takaichi, who is set to be the country's first female prime minister. Markets are betting that Takaichi, who won the race, to lead Japan liberal democratic policy on Saturday. This will blend, because physically, actively, agenda with a still dovish central bank amidst the threatened long-term yields higher, and steepen the Japanese government bond curve. The parliament is expected to confirm the hard-line conservative as Prime Minister as of October 15th. Takaichi is seen as the proponent of economics, the economic strategy of the latest promised Prime Minister, Shinzo Abe, which touted fiscal spending, loose monetary policy, and structural reforms. Goldman Sachs said that Takaichi's win is an upside risk in long-term JGB yields, calling to 10 and 15 basis points pop up in 30 years. Possible first step. The bank's analysis added the long-term Japanese government bonds have been recouped from cylindrical anchors, such as inflation or economic growth this year, and could remain elevated as investors price the risk of a looser fiscal policy and a slowing DLJ hiking cycle. And the mortgage just went bust thanks to the higher rates. The average rate on the 30-year fixed and conforming loans increased to 6.46% over 6.34%. That's by the loans to 20% down, according to the Mortgage Banking Association. As a result, the applications to refinance a home loan dropped 21% last week from previous week. They have surged much higher just a few weeks ago when rates dropped to that 3-year low just before the Fed cut its rates. Its drop in refis also came even while mortgage rates 32 basis points higher last week than they were at the same time a year ago. The average loan size dropped substantially, of course. Higher rates eliminate that incentive for people with larger loans. Applications for mortgage to buy a home also 1% for the week. It was 3 consecutive weeks and at a low, 16% higher than this of 1 year ago. Mortgage rates hardly moved at all this week, but the expectation was The clip mostly was going to be decided on Friday. It was his economic data to be set to release, but as we've said, the government shutdown has stopped that. U.S. stocks were mixed on Monday as federal government shutdown entered another week, while a mega deal between AMD and OpenAI lifted hopes for the AI trade. The Nasdaq deposit led the way higher, rising a 3.0 amidst an overt 25% surge of AMD, while the S&P ticked up 0.2% at the Dow Jones Industrial Average. Hold loss from gains falling 0.2. Another jolt to the AI outlook. AMD said Monday that it had signed a multi-year deal with OpenAI, chips that will bring tens of billions of dollars in annual revenue. All against a ChatGPT order to purchase up to 10% of the AMD, one of NVIDIA's key rivals. That served as another AI-related boost for the markets. Has proved resilient despite the shutdown debacle. Wall Street on Friday returns to a strong rally that has pushed NVIDIA access to fresh record high. Eyes are now on the OpenAI developer, an event on Monday for potentially market-related news. Investors have focused on upbeat prospects for AI, even as the stock delays key economic releases such as monthly jobs reports. On Wall Street, data starts investors can still get input for calculating the changes of 2 interest cut rates this year. On the Federal Reserve front, President Trump backed Governors Stephen Mnuchin to speak on Wednesday, followed by Chair Jerome Powell on Thursday, and data from unknown governments also on deck. The University of Michigan's Consumer Sentiment Report for October, the likely highlight. Elsewhere, markets were rattled by political upheavals. In France, the CAC 40 stock benchmarks sank as the euro fell. This sudden resignation of its prime minister pushed the countries back to a political process. And in Japan, Nikkei surged almost 5% to a record high as the ultra-conservative was all found the country's next leader. In a surprise choice, meanwhile, the third call to earnings are set to start trickling in with results in PepsiCo, Delta Airlines, and Levi Strauss. On the docket this week. Also in recent news, federal judge narrows class action against UWM, United Wholesale Mortgage. Claims under RESPA and Florida Deceptive are Unfair Trading Practices Act. And the UD may proceed. The U.S. District Courts for the Eastern District of Michigan granted in part and denied in part United Wholesale Mortgage's UWM to dismiss punitive borrower class action suit, dismissing the majority of the claims, including the federal RICO counts, while allowing a pair of Florida-based claims to move forward. The court also denied, without prejudice, UWM's most to strike this class and rejected its most sanctions in an 87-page opinion. And the U.S. District Judge Brandy McMillan granted in part and denied in part UWM's motion to dismiss several civil RICO and consumer fraud cases filed by borrowers across multiple states. The court dismissed the majority of the plaintiffs' claims, including federal racketeering, conspiracy, unjust enrichment, and most state consumer protection accounts. However, the court ruled that the 2 Florida borrowers' claims under the Real Estate Settlement Procedures Act RESPA and Florida's Deceptive Unfair Trading Practices Act may proceed. The UWM spokesperson responded, "We are very pleased to see that the courts dismissed nearly all claims and independents, leaving only 2 narrow claims. The decision confirms that the entire case that was resolved in their favor and underscores that there was no merit from the start of the allegations and that they are confident in the remaining lawsuits will be resolved in their favor. The key claims in the lawsuit, yourself versus United Wholesale Mortgage LC, accuses UWM and CEO Matt Shavia of running alleged steering enterprise that used the company's all-in broker agreement to pressure mortgage brokers to send loans exclusively to UWM, alleged leading to high costs to borrowers. Plaintiffs also claim that UWM's broker marketing platforms such as FindAMortgageBroker.com and SuccessfulMortgageMatter.com misrepresented brokers' independence. The lawsuit was filed on April 2nd, 2024. The same day, a new media fellow the investigative article contains similar allegations. UWM and its CEO, as a Sepia, then filed a motion to dismiss without dismiss, claiming that the dismissal was deflected unprecedented, unreported errors to smear United Wholesale Mortgages and its affiliates and its CEO, all of which served of the market speculators. Judge McMillan rejected those racketeering claims, finding that the borrowers had not only possibly shown that UWM didn't directly cause their injuries, while the complaints sufficiently alleges an association in fact. The facts fail to significantly show that the company's conduct was approximately cause for the plaintiff's injuries, the judge wrote. The court also ruled that UWM wholesale broker agreement and all-in policy, which bars participants from setting loans to Rocket Mortgage or Fairway Independent Mortgage, did not in and of itself constitute bribery or fraud under the federal law. McMillan hedged that the alleged broker conduct originated from brokers not UWM, and that the plaintiff's injuries were well beyond the first step of or in the cat chain. Still, the judge allowed Jill Jeffries and Daniel Singh to pursue RESPA claims based on the alleged kickbacks or earning fees coming to the broker compensation, and allowed Jeffries, Singh, and Brian Weatherall to proceed under Florida's Consumer Protection Act. The remaining claims include those, the RICO state bribery laws, and California, Tennessee, North Carolina, similar statutes that dismissed from prejudice SFS Holding Corp. And individual defendants, finding insufficient evidence of personal involvement beyond corporate action. The court denied UWM's motions and sanctions and declined to strike its allegations, leaving open the possibility, therefore, these claims in Florida could be settled in A-class treatment. For all remaining claims are count 3 RESPA, in counts Jeffries and Singh, and count 9, Jeffries and Singh, judgment McMillan concluded. Of course, if you've ever worked with UWM Mortgage, you know that you must have a no-compete clause. So here's the takeaway for the brokers and the lenders. Attorney and founding partner Brody Gabbard said the judge dismissed the broader racketeering RICO fraud claims because it did not show that UW intentionally misled their borrowers or engaged in fraud schemes. Those claims required proof of deceptive intent and specific harm to consumers, which the court found lacking. Gabbard said that the present rates will be allowed to continue does not require proof of intention or deception, only that something of a value may have been exchanged in connection with the referrals. The main takeaway for brokers and lenders is the courts are demanding detailed borrower-lender proof of fraud-based claims. It will still close mostly scrutinized incentive programs, and it does implicate RESPA rules. The ruling also comes with a time of major change for how RESPA will be interpreted after the court's loophole, the Bright decision, and the Chevron defense. The judge, not just regulators, will decide what counts as a kickback or anything of value. That said, the shifts could eventually narrow how far RESPA reaches. It also creates a more short-term uncertainty. For that reason, that does not recommend straying too far from long-standing or CFPB guidance, since those interpretations remain persuasive in courts and continue to influence regulatory impulses, incentive or loyalty programs. And they should be reviewed carefully, and to ensure they do not, even unintentionally, encourage steering that is not in the borrower's best interest. Transparency, documentation, the internal compliance policies remain the message in the evolving legal environment. Bond Skew UWM remains a defendant in the plaintiff in multiple legal actions tied to its all-in ultimatum broker agreed policy. The lender is also currently defending its class action filed in April of former employees in the U.S. District Court in the Eastern District of Michigan, alleging violations of the Employee Retirement Income Security Act. Thank you, ladies and gentlemen, for tuning in to Wolfie on Wall Street and Mortgage Minute. Please remember to subscribe, to like, and to comment. And if you have any questions, please put them in below and we'll see if we can possibly use them in our next segment. Look forward to seeing you soon. And now it's martini time. Next week we bring you a howler. Ow! Night.